And joining me now with more on 2025 and what's ahead in 2026 is Bob Iaccino. He's co-founder at Path Trading Partners. Bob, it's great to have you on the show this morning. And as we look to round out trade for 2025 this week, what are your biggest takeaways?
At the end of the interview. So to you and everybody else and all your staff, I appreciate you having me on. Looking at 2026, I think there's quite a few things that are in flux, not the least of which will be who the Fed chair is going to be and what path that Fed is going to take. You know, we're all very used to thinking that as the chair goes, so goes the Fed. But over the last couple of meetings, we've seen historic divergent opinions, to say it in a nice way. And I think, you know, Kevin Hassett right now is sort of in the pole position of replacing Jerome Powell in May. So I think a lot of focus is going to be put on that. By the way, he's not in the lead by a lot. You look at some of the betting markets and it's 41% to 35%. That could shift very easily, especially with President Trump making the decision. We all know that he can change his mind pretty quickly. Also, I think gold is a very important story going forward because gold has sort of profited, or again, lack of a better word, by two main themes. Number one, inflation isn't dead. And number two, the Fed is going to be easing and central banks are going to continue to accumulate gold in the face of a weaker dollar. I think that could actually slow. I think a lot of people are starting to think that inflation is beaten, given that the tariff-driven inflation hasn't really shown up except for other individual one-off sectors. So I think gold could suffer from that, although I am still bullish. I'm a buy and hold of gold going forward until things change. For example, profligate spending in the government. And then the third thing I think is the AI trade is going to slow down. I think it's not going to dominate like it did for the first 3.5 quarters of last year. I think it's going to be about winners now as opposed to the entire sector just rising and dragging the rest of the stock market with it.
Mm-hmm. You know, some would say that 2025 was a tough year for stock pickers. Do you expect that big picture to change in 2026? To your point there about picking winners in spaces.
I do. As a matter of fact, one of the last trades we put on for 2026 was Scott's Miracle-Gro, which is one that isn't really on many people's radar. We did that through our newsletter, The Unfiltered Investor. And the reason we did that is because moving away from some of these names that are just bought because you're supposed to buy them, as opposed to the fundamentals being good or the chart looking good. So when you're talking about that, yeah, you could buy AI, but I would do it more in an ETF like MAGS, MAGS, which is Roundtree's Magnificent 7 ETF, as opposed to picking individual AI or Magnificent 7 winners. And that's why I think next year we're going to be focused more on consumer discretionary, because I think the high-end consumer is still going to be doing well. I think the middle of the road consumer, people who might get an advantage from no tax on tips, no tax on overtime, they're going to be spending as well. And I think a lot of that's going to come in consumer discretionary. And I think taking larger positions there, as opposed to taking smaller positions in AI that might just explode to the upside, is the smarter way to play next year.
Let's talk about the path forward for borrowing costs, Bob, because we did see multiple rate cuts this year. The expectation is that we will get at least one next year. What does that do to the equity market and the precious metal space?
Well, again, I think it slows the precious metals, save for silver. I mean, silver's got a big pullback coming, but I don't necessarily think it's going to be dramatic. I don't think it's going to be back to $35, for example. I think that pullback is going to stabilize, and then that's going to be the floor in silver. We saw that last year in gold. When gold pulled back to 3,800, it flattened out, moved sideways in what we call sideways correction, that exploded again, then pulled back again, 4,100, 4,200, and then stabilized again. I think you're going to see the same thing in silver, and that's the electrification build out. Whether it's AI, green energy, it's all going to be electric going forward if you just look at the data centers. You look at that from an equity market perspective, and again, this is why I think we're looking at winners now as opposed to an overall market blast to the upside. And you're right, it was a bad year for stock pickers. I think 2026, that's going to change dramatically.
We'll be following that closely in 2026. Another change that we anticipate next year, of course, is the midterm elections. And we have been hearing even throughout 2025, Bob, that could add some volatility to the market. What are you preparing for?
Well, I'm preparing for a Republican loss. By the way, I'm not predicting that. I'm just preparing for it. And those are two very different things. You mentioned some of the confusion about what may go on with monetary policy. That's a big part of it. If you get pushback from Congress, I really think Congress pressures the Fed more than the president does, despite that particular arm of the government, while being independent, falling under the executive branch. So I think if it looks like the Republicans are going to lose, there could be quite a bit more volatility than we expected, maybe when President Trump won the election in the first place and the Republicans kept the Senate and the House, although not at a supermajority level. So I think that is going to affect the markets. You combine that with what is likely to be an easier Fed, because again, President Trump is the one appointing the head of the Fed. You're going to see dissent, but easier policy out of the Fed. And then going into the midterms, that's going to sort of shape the whole narrative. Because if we don't get an economic rebound and we don't get this affordability crisis, as everyone is wording it, starting to seem like it's under control, and that really means deflation and disinflation, not just slower inflation, because that won't convince the midterm voters. That's going to add an absolute, I was going to say a bad word there, Kristen, a lot of volatility to the markets.
All right, we'll be watching closely. Bob Iaccino, he's co-founder at Path Trading Partners, joining us as we count down the close of 2025. Bob, thank you.